Thank you, Angel, and welcome back, Angel. Lovely to have you back in the control room, and I hope you're feeling much, much better. Welcome, everyone. It is nice to have your company as well on this Monday, the 20th of September. Goodness gracious. First 3 weeks of, what's it called, spring in my part of the world. Autumn in other parts of the world has come and gone, and I hope it sees you well. Put it that way. Where are we going to start today? Well, it's a big week. We've got 4 central banks strutting their stuff, releasing their statements this week. Of course, it happens a little bit later in the week. BOJ's first, I think. Then we've got Swiss National Bank, Fed, the Bank of England as well. So it could be a pretty big week in terms of market moves. Hi, Paul P. Let's hope we can take advantage of that. My early thoughts are the ship has sailed on a couple of the things that I was looking at. Maybe we're going to pull back and a second chance to get in. Let's investigate that anyway and see what's on board for the week. We'll start with pound US dollar and see if we're going to trade the breakout today. Well, we're actually still in the breakout from last Thursday. When did we trade that? Last Thursday. That's Friday. Yes, we broke out there, right? A little bit of negative and then into the money. So what do we do? Well, the way we're trading this breakout at the moment is as soon as you get 1-to-1, you need to move your stops to entry, do nothing else. Just move your stops to entry, which are there, and I haven't done that yet, so let's do that. Entry was at, can't remember where, 137.88 per chance. Yeah, that'll do. 137.88. So stops to entry on that one. Okay, this looks to have legs at the moment. But the one thing I wouldn't be looking to do today is trade it short if I'm not already in the market, which of course we are. Welcome to, hi Vivian, how are you? G'day Lewis, Gary, already said g'day to Paul P. And Andy, hi. Good to have you guys on board. I'm not going to trade the breakout today because to my mind, it is more likely to go into range than it is to go anywhere else. Why do I say that? Well, it's a good question, but primarily 2 reasons. There's one. I think it's going to find it very, very difficult to get through that level, although that said much about momentum as well. And we do have momentum with the US dollar, equity markets tumbling, all sorts of things going on. We do appear to be in a risk-off situation. And that, as I said yesterday in the Sunday show, is in currency terms couldn't be more evident than in Aussie Yen. And we'll get to that in a tick. I'm praying, Preying, on a pullback on that one in particular, so I can get short. Reasons, look, there's plenty of them, I've got to say. But once we're into this this risk-off scenario, which appears to be the case, then it really does make sense to be trading Aussie Yen short. As I said, we'll get to that in a tick. Target for pound US dollar is, as I look at this chart, where is it? 2.5 to 1. I don't know if that lines it or not. We had a 70 pip or 71 or something pip risk. So we're looking for what? 140, 175 pips. That's the level there. So we won't take profit until there. 136.13, that makes a bit of sense if I have a look at the daily chart. Yes, I think we're going to have a problem getting through here today, but as I said, such is the momentum with the US dollar at the moment, and the pound seems a bit whiffy as well. I think we'll be getting down to there, and that looks to be a pretty good place to get out as well. So that's the target, 136.13. Yeah, 136.13. But as far as trading the breakout today, as I said, I think this will pull it up to the short side. Maybe only for hours, but it will pull it up in my humble. And that's why I think we'll probably get back into this zone and finish up there by the end of the session today. Untested daily pivot, that always is attractive to me. Do I want to trade it? Wow. It's going to be pushing SH12 uphill with a shovel, frankly, because the momentum is so strong. If you want to trade retracement, I don't have a problem with that. That's I was going to say wise thing to do. It's something you need practice at, and you need a reason to do it rather than just one. And an untested daily pivot is not enough to get me to trade this long. I would need to see some form of reversal, and then after that, I would need to see confirmation of that. The confirmation of that would come in a higher low. So I'd be looking for one of the usual, it's either a bullish engulfing bar, it's a double bottom, it's an inverted head and shoulders, and then I want to see a higher low in the vicinity of this area here would be good. Then we could think about trading it long. But like I said, that's fraught with danger, and you're trading super counter momentum. This may be one of those days where the daily pivot doesn't even get a look in. Anyway, that is that. I've given you the targets. I have told you I'm not trading the breakout today. That's about all you need to know on the pound. If I was biased in any way, then I've got to be thinking this level here is going to give us a bit of a bounce. Where to? Don't know. But if you're a daily pivot aficionado, that probably is a reasonable target. I'll keep my eye on it, and if I see that double bottom on a smaller time frame or something that gives me the indication that this actually can go, then I'll let you know. But at the moment, it's a no-go zone. Now, like I said, it may well be that the ship has sailed on a few of these. I had 4 reversal bars, which are now known in my vocabulary as game changer bars. One of them was pound US dollar. Now, those are, and I do see a few more people in the room that I haven't noticed in the past. G'day, Ram. Nice to have you on board. Welcome. Who else is in there that I haven't seen for a while? No, I think I've said g'day to everyone else. SF, how you doing? Swee, hello. Good to have you all here, as always. So those of you who are new to this session and have no idea what I'm talking about when I'm talking about game changer bars, this is how I approach my week. And I go to the weekly chart, and a game changer bar is pretty much self-explanatory. I'm looking for the previous momentum, which in this case would be up, to reverse and go in the opposite direction. So how do I judge that? Well, the previous bar, and well, in this case, that's the previous bar to this one, but I'm talking about a week, right? We're talking about a weekly chart. So last week is the bar that I'm interested in, but we judge that bar on the week prior to that. So here's the rule. The rule is if this candle, so last week's candle, has a high higher than the previous week, which it does, and it closes on or near its low, it's closed bang on its low, extremely bearish when you see a candle like that, pardon me. That is the criteria. Now, it's not, like I said before, with the untested daily pivot, you need more than that. It's just one layer, one thing that's pointing in the direction of this going south. You need a whole lot more than that. Well, in this case, we've got a double top. We've got a lower low, we've got a lower high, we've got another lower. Ooh, we missed out on the lower low. So that makes it a little bit more tricky. And then we've got another lower high. So it's not fait accompli, but we do have a close below the monthly pivot. We've got price coming back underneath the resistance trade line. And really what I was looking for, maybe on the daily chart, was a test or retest of those pivots to go short. But the indicator is this bar here, and that is the game changer bar. So that's all we're looking for. in the week, the first day of the week. I do my analysis on the Sunday. I'm looking for that bar to tell me which direction we want to trade pound US dollar this coming week. Whether we get an entry or not is another story. Now, it's very, very difficult on a Sunday to say, okay, put your entry below that bar and put your stop loss above that bar, for a few reasons, but not least of which is because we have such things as gaps that occur over the weekend. And we had a gap over the weekend, but it's not a very, very big one on the weekly chart. It gets a little bit bigger on the daily, and then it gets, I wouldn't say monstrous, but you can see on the 4-hour chart that we had this gap here. So that's where the week begins. I hate gaps. Gaps are really, really confusing to me because I have no idea what the market's going or how the market's going to react to that on Monday morning. At this Monday morning, we saw price go up and come back down with momentum, as suggested by the candle on the weekly chart. So can I trade that? As I said before, no way in the world I would look to trade that short if I'm not already in the trade. I have to wait for a pullback, and especially because we're at that support level. But that's really what I'm describing here is the game changer bar, as I call it. So we had 4 of those, one on pound US dollar, one on pound yen. Now the pound yen one, exactly the same, right? Couldn't be more replicated than I can see this chart now. Higher than the previous bar, close on or near its low underneath the monthly pivot. I don't think we've really got a false break scenario, but the indicator is telling me that we're going to go short this week. Now, again, I'll go to another level here. The context around this has to be evident. And the context that I use is what is the chart, the major and primary chart, this is the monthly chart, what is that telling me from a big picture point of view? What is the most dominant feature on this chart? And you could say, okay, that big head and shoulders there's dominated the market ever since it was formed. And you'd be right. And we're going back to 2007. We're going back to the global financial crisis. Since then, we've had a big double bottom sitting here. We've had another head and shoulders sitting here that drove the market back down. Since then, we've put in a double bottom. To my mind, this is a very confusing, which is the dominant feature of this chart. But I've got to go with the base that's been formed. So I'm thinking, we're going to go long here at some stage, but we've got a massive problem. And that problem is this resistance area here. So I'd be expecting that resistance area to do exactly what it's supposed to do and force the market down to where? Probably the last breakout level, which is here. So that's the level that I'm looking at on pound yen. Can we trade it there? Sure we can. And do we have a reason to trade it there? Sure we do. We've got that game changer bar. But we only want to trade it until we only want to be in the market until we've got no risk involved. So pullback required today to get in, didn't happen. As I said, there's a lot of these that have gone. The ship has left the shore. Euro CAD's exactly the same in terms of you've got to wait. Why have you got to wait? This one's a little bit different because I can't trade into this level here with the risk that I would have to take into the market. It is a game changer bar. Again, those of you who are here for the first time, game changer bar going in the opposite direction this time, where you've got the low lower than the previous bar, and it's closed on or near its high. It's not on its high, but it is near its high. So that's telling me that the market's going this way in the first instance, but I would have to take a risk of, if I traded the bar, 180 pips, and my first reward is at 55. That doesn't fit my criteria. I need at least 3 or 1/3 of the risk to be banked at TP1, and TP1 looks pretty strong to me. I think this is going into range, and I'd be looking to trade this off the top down to the bottom rather than go through that level. If it goes through it, of course, and retests it, then different story. Dolly Yen was the only other one. Gee whiz, you've got to have kahunas of steel, and they'd have to be the size of Mount Everest to actually want to trade this at the moment, in my opinion. You can see these candles here: high test, low test, high test, low test. They're all over the shop. No interest. We've got to get out of this noisy area before I'd be interested in trading Dolly Yen. And then you'd have to bribe me because I hate the black pair to pieces. And of course, my trade of the week gone. Well, I may not have gone completely. I spoke about this last night, and I thought it wasn't a game changer bar on the weekly because we didn't have a higher than the previous. Certainly closed on its low or near its low and underneath the monthly pivot. And I think if you throw the fundamentals into this, and Ash and I will have a talk about this shortly, I would imagine, once Ash has done his thing, this just looked to me as a ball terror of a trade short Aussie Yen, given the risk-off attitude as well. This is really the pair. If you're going to judge risk-off, this is the one that you want to be trading short. And gee, I'm desperate for a pullback, so I can do that, I've got to say. And as I said in last night's preview, I think the Aussie's got issues, fundamental issues, and we'll discuss those in a little bit as well. But let's bring him in. G'day, Ash. How you doing, bud?
Yeah, very good, mate. Very good. I see your quandaries all over the place. The market's actually moving, which is fantastic.
Yeah, it is, isn't it?
I've got some positions in the market on the Ftse, which need a whole bunch of management. I don't think. Good morning, Lewis. I don't think it's going to be of anybody's interest to know how I'm having to manage this stuff right now, because it's not a straight down the line kind of strategy, if you like. So I will bring you the Ftse and we'll touch on it a little bit. But
cool.
Lewis might have some interest in it. I know he does a little bit of this, but generally,
do you think this is the draining of the swamp or the big move that we've been waiting for?
I think it is, mate. I do. Yeah, I do think it is. I mean, I was going to sit on the fence a little bit and say I think it could be, but I'm gonna actually go on one side and say I think it is, and I'll talk about why as well. So I will touch on my Ftse trade. So I had a few longs up here, which didn't work out. So I've gone short here on the Ftse to hedge out these positions, which is working out very, very nicely at this moment. And with a bit of trading here, there, and everywhere up there, there's I am slightly down, but that's not really much of an issue to me. What I would normally do in a scenario like this is eventually take the profit on the short and then see if it can come back up again and make some way back up into the long. And so this is going to be a timing issue. But the market doesn't look ready to come up. And I've actually sort of picked out a point even lower down here. I think that there's every chance that the Ftse could come down possibly another 3%. Now, if we consider that from the highs, that would be near 9% move from top to bottom. Now, Julian was talking about a 20% move to the downside. Now, I'm not sure whether I would fully subscribe to a 20% move, only because I think there's a lot of support around here. But by the same token, obviously, stuff like that can happen. There's another level there. But you can see, look at this confluence area in here. There's around here looks like the place to pick up along in the Ftse. It's possible from there we bounce and come down again. It's possible we go through it, but my personal kind of stance at this particular point is that we will probably bounce, and that leads us down around about another, as I say, that's about another 3% to the downside. Between 3 and looks like between 3 and 4.5%. That's what I'm looking for the Ftse. Lewis is going to go short on the trend line. Yeah, and I think there's every chance that happens. I don't see signals to suggest that the Ftse turns this morning, which is why I haven't got rid of the short yet. So I'm not keen on going short, though. This is the other thing. I do think that we're starting to see the draining of the swamp, but now we're in a buy zone. It's a buy zone that I think will get broken, but we are in a buy zone. So I'm not keen on going long on the buy zone. Going short on the buy zone. particularly with equities. So I'm going to see if this can just be left and play out, make some little bits and pieces as we go. Look for this potential to jump up a little bit. As Lewis said, I think this trend line is probably likely to hold. So a possible bounce here, and then we come back down again. But I think that we are probably on a bit of a long route to the downside now, mate. That would be my opinion. Now, my reasons for it are we are seeing global slowdown. We are seeing surveys suggesting that we are going to get a shrinking of GDP. We've got problems in China. You see that manifest in what's going on with the Aussie, and we've got central banks talking about tapering or a slightly more hawkish tone than they were before. So this is almost what we've been waiting for quite some time. Everybody kind of like gets caught off guard when the markets come in the opposite, starts moving in the opposite direction, and we know the term, it goes upstairs and comes down the elevator. And I think that's probably what's likely to happen here, that we've gone up the stairs. FTSE's not the best one to look for this, but if you look at the S&P and on a daily chart, you can see we have been going up the stairs quite nicely. And it looks like we're about to come down the elevator. And if this was to come down 20% from the highs, that leads us down to not even a point on my chart. But if we do sort of like say, it's going to come down 20%, and we bring in the monthly chart, then you start to see actually there is a level 20% below where we are. We're going to need to see around about an 800-point move to the downside on the S&P, which is well, it's maybe slightly higher than this actually, but it's this kind of area here. And if you were looking at this on an hourly chart, you would say, yeah, I think it's going to come and retest this area. The fact that it's on a monthly makes it feel like it can't happen. It makes it feel like, month over month over month, that you're not going to get the retracements to retest areas that it normally would do on a fractal chart. So when I think about it that way, I think, well, of course it could come down here. Of course we could get a 20% move. So when Julian said yesterday, 20%, I think a 20% move, I was like, really? And then I put on my longer term timeframes, and I was like, yeah, actually that makes complete sense. When you break it down to just to looking at the technicals, then these areas should get tested. And I think this is the one area. It's very rare that areas don't get tested. Very, very rare. And if we think about this particular trend, and I'm just literally talking about the technicals here, and we'll talk about the potential reasoning for this as well. I mean, we've touched on it with the slowdown, but we'll think about it in kind of almost really nice, simple terms. There's the high there. Let me bring this thing here and do this. There's the first high there that it needs to break. And then it tests here, and it starts to move up again. Here's another one here. Breaks through, tests here, moves up again. Bit of a sticky area along here, but eventually it does break through, comes down, tests, actually tests the lower end of that one, moves up again. Here's another one here, moves down here, moves up again. Now this is the last one here. And if you like, you could use the high, but it's somewhere in this area over here. So we are kind of we are like looking at an area that at this point has not been tested, because we've had the very last move has been pretty parabolic. This whole move here has been pretty parabolic. So to come back down and test this area would make sense if you just were to look at the way that the charts generally move. Now we're looking, this is 2011. So ever since 2011, we've had a breakout point and we've tested it. We've had a breakout point, we've tested it. So this is the only area so far that hasn't followed that same rule. So for it to come down here then starts to look a lot more likely if you kind of go on that. So I would subscribe to the 20% move in the S&P. And if I'm subscribing to the 20% move in the S&P, what does that mean for the FTSE? Well, does it mean 20%? Possibly. But if we go on a different premise and we say, let's not talk about 20% and this, that, and the other. Let's just talk again about structure, market structure instead. take some of these lines away. What's happened here is that we've had, I'm going to draw it in my scruffier pen this time. We've had this area here, which again, you know, whether you use the highs or the closes is up to you. But I like to use the closes normally. But on this example, I think that we can use the high because we do get a test. That's good enough. Now we've gone up here. Now, okay, you could say that one, but I think that we do need to use the closes here. And the reason for that is that I think that this area here and here and here is a much stronger level to kind of like come back to. Ftse, I don't think is anywhere near as clean, and this is probably why a lot of people don't like trading it. But it's somewhere along here, you know, that we're going to get. It's somewhere between that point, I think, and that point there that we're likely to get the test. Now that leads the Ftse down. On the first instance, that would lead the Ftse down. Looks like that's the 9% move that I was talking about. That's where I'd quite like to start picking it up. The second one is around about 11%. So it's not even the 20% area. So I'm not sure whether the Ftse is likely to fall 20%. And this is where sort of like, you know, trading becomes interesting and choices can be made. Because what you can then do is say, okay, well, if the Ftse is not going to fall 20%, if I don't believe the Ftse falls 20%, and if it is to fall 20%, then we're going to leave it down probably near, let me just see where that would be. That leaves it down here. And to be fair, you could argue this has not been tested. So I think there are, and this still isn't quite 20%. It's more like 18, 15, you know, 17 to 18% move to the downside. But you know, when you kind of like consider what we've just looked at with the S&P, this could happen. You know, this genuinely could happen. It's got a lot to get through to get to this particular point. But and I do think this bar is a little bit problematic with the analysis of has it tested the area because of whether you use the highs or whether you use the closing prices. But if we do stick to the close price methodology instead, that would suggest that this could be done. So I think there's much further to go is the long and the short of it. Whether it comes down as much as we think, you know, on the 20%, I don't know. I don't know that bit. But I do think that there's further to come down, and that's just on the technicals. Now, as I say, if we now move to the fundamentals and start bringing in some of the data points, are you getting that? Yes, you are. And let's go from the start of the month. The two nations that we're most interested in, of course, are going to be the United States and China. So let's just use data from those two nations and see what we have. Okay, so the manufacturing PMIs, that is expansionary, not a problem. That's not a problem either. So far, you know, at the start of September, nothing really was suggesting that that we're coming down too low. Then we get the unemployment claims, which don't really start to improve sufficiently to suggest that the Feds are in a position to start tapering. Unemployment rate still a little bit high. You know, where we would want to see if we were sort of like looking at an expanding GDP scenario would be around about 3.5 to 4% for unemployment. Now we don't get that here. Then we get services PMI a little bit shrinking, but nothing again. It's nothing extreme there for the PMI. So that would still expect a bit of expansion. We come down and start looking at some of the PPIs as well. Sorry, PPI, yeah, the PPIs, which is talking about inflation. So inflation is starting to pick up here at these particular points. Core inflation comes down a little bit here, so that's strong dollar. But this is where we start hitting the numbers which are a little bit more problematic, and the core retail sales not too bad at all. Does kind of point at expansion. This preliminary University of Michigan consumer sentiment, though, that is indicative. That kind of number is indicative of contraction, not the same pace of growth that we've seen. So I think you could argue from the United States point of view that the numbers are patchy. You know, you could say that they're you know, that you could sort of describe that we've got enough expansion to continue. You could say that there's a bit of a slowdown to sort of like say that maybe we're going in the opposite way. But it's China where we start to see the real problems. Look at the massive drop in retail sales here. 2.5% from an 8.5% gain in the previous month. So this is where the picture is changing, not in the United States, but in China. So we see fixed assets investment a little bit lower, and we know that there's a big problem with property in China right now. Industrial production again lower than previously. Unemployment rate doesn't seem to be a problem, but it's these areas that that there seems to be more of a flag to say, if this stuff happens and we start to see a slowdown in growth, if this stuff happens, that would start to say that businesses aren't going to have the same profit lines like they've been enjoying. And the profit levels have been pretty astronomical. The bounce back has been extreme. And I think it's one of those that what goes up must come down, particularly when it goes up at the velocity that it did. The bounce back after the pandemic was huge. Profit numbers were good. Now we're starting to see a picture which suggests global slowdown, little bit from the United States, big time from China, and then you start to see soaring gas prices. We've had 4 companies shut down, I think, in the last week over here because of soaring gas prices. So there's other little bits and pieces that have been going on the outside of it that also suggest that we are going to be hitting some pretty turbulent waters. And again, this is suggesting that companies aren't going to have the same profit lines that they had before. So when you get profit misses, what happens is those stocks start to sell off. All that I can see that's going on right now is an anticipation for that to happen. Now, that doesn't mean that we go into absolute contraction, which is why I think a dip between probably 10 and 20%. It's a pretty wide margin, but between 10 and 20% would be a good time to then say, let's pick things back up again. I don't think that, I think a big move to the downside is going to spook a lot of people, but I don't think we need to be too concerned. I think that when it comes down to it, it will give us a buying opportunity. The Fed will probably have to step back in again, and then we start moving higher. There are other things.
Sorry, mate. I'll just add a question into that. Where are they, the market movers, going to deploy their funds?
Well, so this was a question that I had yesterday as well, mate, and this is where I think it does start to become a bit more confusing. I suppose if inflation starts to reduce, which looking at some of the US numbers, it looks like we might have come off the high end of it. Now, that does kind of encourage the bond purchasers to go back into bonds. You know, they're not so worried now as long as they're going to get a real inflation percentage lower than their bond yield returns, then they won't be so worried about going into those sorts of things. But I guess what we tend to see is rotation. You know, when this stuff starts to happen, you tend to see a little bit of rotation, going on with the market. It might be that the cyclicals start to come back into play. So what we've had is growth, all about growth. NASDAQ booming to the upside, and the NASDAQ is probably going to be the one that's the most under pressure because of this. So we could then start to see money go back into the growth stocks, and I suppose this is where we start to go, okay, well should we have a look at some of those particular stocks to see whether they are low enough to buy. We know the travel sector is low enough to buy. I'm looking at the Ftse 100 this morning, and there's 3 stocks that I can see on my screen that are higher. Now if I go right down the list. Yeah, it looks to me like there's 4, 5, 6. Yeah, it looks like there's 6 stocks up. So EasyJet doing well this morning. So there's a travel there. TUI doing well, up 2.5% this morning. I mean, that isn't really a kind of like an overall kind of like market picture. That's people basically saying, actually, we can play a little bit the travel story from here. Those stocks have been hammered enough to be inexpensive, and we can pick them up. But it doesn't look like there's any rotation going on right now, mate. I think what may well happen is that we start to see a move out of stocks they're holding cash. The dollar's starting to pay a little bit as well, and this is what can happen. If they do start to taper and then potentially start to raise interest rates, then it's worth holding cash, and it's probably worth having some bonds as well. So there might be an anticipation of a little bit of that. Hold it in cash until the move happens, and then start to deploy your funds again. So I suppose the only place to me that seems relatively sensible, not because you're going to get a return, but relatively safe until this comes off again, is to actually reduce your positions. Gold is doing nothing, so the safe haven metals aren't a place that cash is being deployed either. But this would suggest that we start to see it start to see cash kind of come back into play again, but not necessarily for a return, as I say. We are.
Is gold doing nothing, or is gold doing worse than nothing? Do you think?
I don't think it is doing worse than nothing, mate. No, I think gold holds. If we look at the gold charts, then
it's still hanging on to that base that it formed from most of this year. Really, there's 3 bottoms there.
Yeah, exactly. And we've talked about this pattern many times. If gold can hold here, then there's every chance that we actually start to see a move higher. Now we've got some fairly important stuff this week as well, because we've got the Fed are out. Let's have a look at the news for the week. So
we got 4 central banks this week.
We've got 4 central banks. Yep. So let's set it for that. Bank holiday in China. We get a little bit more of a look at the States tomorrow with building permits. Look at this isn't a massive problem, mate, but that does, when building permits are forecast to come down, this is also suggesting that economists are sort of like looking at a little bit of contraction in the growth with the United States, and this is a really good indicator. So we got FOMC economic projections, the statement and the funds rate tomorrow. On Wednesday, from the United States. Then the rest of the numbers don't become quite as important, but we do have Jerome Powell speaking on Friday. That's from just the United States. So that in itself is going to be an event, and hearing what he's got to say may well start to boost stocks again. Because if he says, "Look, taper's off," we're not going to be tapering. The conditions are there, but there are other things that suggest that this is too early. Then we might start to see a little bit of a rally back to some of those trend lines that Lewis is talking about. Monetary policy meetings as well from Australia tomorrow. So Japan as well. Yeah, you're right. This fall we got the Swissy as well, and the UK. So it's a big week for news and data. Big week. What do these guys say? If we're starting to see a stock market starting to come down as hard as it comes down, and you almost sort of like look at it and think, are there people trying to manipulate the speech a little bit? It's very good timing, isn't it? You see sort of
seems to be, yes,
these highs in the stock market, and all of a sudden we see a bit of a flood to the downside, and it's almost like a tennis match. Back to you guys. What do you got? What do you got for us? Because if they haven't got anything, and I would suspect the devil will be in the detail of the speech. I don't think they're going to say anything one way or the other. Effectively,
well, as you say, what can they say that they haven't already said?
Do you know, mate? The other thing I was going to mention is that there is a debt payment about to happen as well, a debt repayment. So all these bonds that have been purchased from the governments, and particularly from the United States government, eventually have to be paid back. The interest has to be paid on these bonds that they're buying.
Oh, really?
Oh, yeah.
They don't seem to believe that.
Well, no, they don't. But this is where you start to look at it and go, could there be a default on payment? And if there's a default on payment, then all hell is going to break loose. That's when you might see gold start to pick up. If there's a problem out there with the financial system as a whole, that's when we might start to see gold, because people are going, well, what is money? If it's not fiat, which we know it's not. We know it's not. Many people know it's not. But is it possible that we see gold go higher there? But that's the other thing you see. I think the market is probably a little bit concerned about the amount of money that's been flooded out and
Totally. I
the
mean, if you were blind, deaf, and dumb, you would have to have seen that coming. Really, global
yes,
financial crisis. We didn't know anything too much about the global financial crisis, but if after the event, it's very easy
oh,
to
I
look
think we
around
lost.
to money who couldn't afford it. The lending rate or the LVRs on houses was 100%, 106% here in Australia at some times. You could borrow more than the value of the house. And if that's not ringing alarm bells to people, then it should have rung alarm bells to people. Are we not in a similar position, except this time the money has been folded out or handed out or produced or printed or whatever to the actual governments of the day rather than the individuals or the people of the country? Same thing, it's their money.
Yeah.
It doesn't exist at the end of the day. Who pays it back?
Well, this is the thing. I mean, ultimately, the government are meant to take the money and invest in the country, and then they're meant to make some profits. And I think that's the kind of simplified way of how things should work. Is that the bonds that they're selling to? Yeah, they're trying to sell bonds to the central bank so they can raise cash, and they raise cash for their company, which is the country, invest in infrastructure, as you say, and then they get a return through taxes and everything else. That's the way it should work. But growth has been explosive, but has it been balanced? Because what we've really seen, yeah, Gary, exactly. Greece is a great example, and we almost expect that this can't happen to a first country, one of the kind of big ones. But who says it can't?
Absolutely, who says it can't? Well, they're saying it because they're backing themselves, aren't they? I mean,
they're backing themselves.
Yeah, and gee, I reckon they've got it wrong.
Yeah, but if we think about how it's done as well, it's the crazy thing is that the US government say, right, we need to raise some cash. We need to raise some cash so we can stimulate the economy. And the Fed go, okay, hold on, let's just have a quick look over here. Well, there's nothing in the vault.
No.
Hold on a minute. Why don't we make money out of nothing and pay to the US Treasury, and then we can kind of do it that way. And they say, yeah, that's a really good idea. So basically, it's imaginary money, really, in that respect. Yeah. But that'll work. So that works for a little while, and eventually, it can't, I suppose, work in a way because. Not to want to break everybody under the age of 12's dreams, but Santa Claus doesn't exist, and it's one of those things that you can't really have this kind of fantasy dreamland going on forever. Eventually, you kind of you hit teenage years, and you find out that when you whip back the curtain, that the Wizard of Oz is peddling away. So you kind of at some point it's going to break, and
yes.
I don't know. It's difficult, mate, isn't it? It's a really uncomfortable position to be in, to think that we may well live through that. I don't think my head could take it in a lot of ways.
I can't, and that's the problem, and that's why people, I think, in general, just keep on doing what they've been doing forever, and when they're given money, they just put it wherever they choose to put it.
Yeah,
and it appears for the last 10 years that's been into the stock market. Now, what happens if they're not out of the stock market and the stock market does correct by 20% or 30% or 40% even? And I'm no economist. In fact, I'm not even close. I got kicked out of my economy class many times for fooling around doing nothing when I was at school. And it's just not, you don't need to be an economist to work out, hang on, something's not right here. How can we keep creating funds? How can we keep creating this imaginary stuff, as you just said, without any consequences? Well, everything has consequences.
Yeah, and the problem is, I think, that we've almost met a bit of an apex here, where we've kind of got this situation where stocks have become overvalued, and for the stock market to be stimulated, economies to be stimulated, the central bank needs tools. but it just seems like they haven't got any. You know, that it seems like they've burnt all their tools. They've been flooding money into the market, which is what the pandemic kind of caused. The interest rates are so low. What happens from here? And this is the point, isn't it? And this is where sort of you know, El Salvador might end up as the richest country in the world at some point, because this is the problem. If eventually you kind of get a situation where the money that you have is effectively worthless, then there's a run on the banks and you know and all sorts of things that happen in Greece. That the same thing can happen here.
Germany.
So, well, exactly, Germany, yeah, and it's happened in history. It's happened right the way through history, where cash becomes completely worthless, and eventually you don't want to hold your money in fiat currency anymore. You know, you sort of like, you go, well, let's go and find something which is real money, like gold or Bitcoin or any of the other kind of cryptocurrencies. Which have deflationary. They're not inflationary, they're deflationary. You can't just continue to print that stuff. You could with Ethereum, to be fair, but not Bitcoin. You know, Bitcoin is the way it was designed. It's not something that you can create more of, and that's really the way it should be. That's
Indeed.
If you're going to get a return on your cash. But it's as I say, mate, it's a bit uncomfortable because I can't imagine what happens. I think people in Greece are probably in a much better situation than I am in some respects, even though that kind of hole was plugged somehow as well, to be able to imagine what happens. But it does seem like we are close to a break and a significant break, and we better, you know, get ready to protect ourselves somehow.
Yeah, I think that's why we're having this conversation, is what do we do next? How do we position ourselves? And, you know, there is an argument to cash. There is an argument not to property, in my humble opinion, because every property in Australia is overvalued like no tomorrow.
Yeah.
And I think that's a trend worldwide these days.
Yes,
so New Zealand's the same. Why? And people say supply and demand, and okay, I get that, but really?
Well, let's have a look, mate. Just on that, because we were just where are we at? So tomorrow, right? Building permits. Let's just have a look at the housing situation in the States. Where did I just see that? Housing starts. So it's here. Yeah, I mean, if you kind of look at the chart for building permits, so these are sort of you know, situations and scenarios where builders will go in, and then it costs them money to kind of go and apply for these permits as well. This, as you say, does not suggest a lack of supply. This is a chart which is definitely going higher. It's definitely going up here. This is a slightly different picture when you look at how high it was back in 2006. So we're not really out of the woods yet, but it doesn't suggest that, you know, let's see if we can bring the whole thing on here. This doesn't suggest huge danger. You know, we've been on an upward trajectory here, no problem at all, and we're close to sort of like 2001 levels. I think that, you know, the run into the financial crash looked like there was just a glut of supply that was going on. The only one thing I would say here is that it's probably not such a high level.
But we've also got to factor into that, in my opinion, Ash, that this is where people were getting money that was more money than the value of the house or the value of the building. So are we getting back to there? I believe in Australia, you can still, and you'd have to have more credentials probably than you did back in 2007. But I believe that there is now 100% of valuation being offered to people as we speak.
Right.
I don't know if that's a world thing, but it's certainly happening in Australia.
I think there is, from what I've heard, protections are much better than they were before. So even with those mortgages, I think there are. I think you're right. You do have to kind of go through sort of, you know, quite a few other hoops to actually, you know, get these mortgages and these deals done.
that's only common sense at the end of the day. But that's
yeah,
what
I don't.
That's
I
what
don't
didn't
know.
happen back then.
When it comes down to the housing market, I would have thought the housing market, having been through it, would have been the one area that would be better protected. I'm not saying it will be protected, but better protected than some others. I mean,
Yeah, like
banks,
the US dollar.
well,
I
the banks are going to just have an absolute nightmare, aren't they? If things start to collapse in the financial system, the banks are just going to collapse.
if they've repeated what they did before, yes.
Yeah, and then you start going, okay, well, you know, this is the other thing. What I was going to mention as well is that you can hedge out the risk of this stuff by trying to pick which one's going to be the worst performer. If you look at the Nasdaq coming down 20% from the highs, that's 15.6. That leads us down around about 3,000, which is,
Yes, it is SF. Look, that's the mystery to me. Why is the housing market just going through the roof? Real estate, it's crazy. Sorry.
Yeah, that's going to lead the Nasdaq into this area. Difficult, actually, mate. I mean, but what you'd really want to do is, I think the way to protect yourself, you know, you were sort of like saying, what do you do here? And I think that what stock traders will do, you know, the skilled ones will start to have a hedge trade, and they will try and pick an industry which is going to suffer over an industry that will do okay. And to be fair, I never thought I'd hear myself say this, but the travel industry seems to me like the best bet for the long. So you could say, let's go long travel and short pretty much anything you want. You know, you could go short banking. You could probably go short mining at the minute, and maybe short housing if that's, you know, the one that you're kind of thinking about as well. But
it's kind of screaming diversify, isn't it?
It does say that, mate. To me, it says hedge the risk, and hedging the risk means go and buy something and sell something on the same timeline, and look for it to seesaw. And all you're basically saying is this isn't going to suffer as much as this. You could sell the overall equities. I mean, that's another way to do it. Just sell the S&P, but buy travel. Buy something in the travel sector. Sell the Ftse, but buy something in the so sell the Ftse, buy EasyJet, buy TUI, something like that. Because the chances that EasyJet suffers as much with it opening up and with it already having its own kind of bear market, if you like, is probably less likely. So there are ways that you could play this market and still make money, and probably still make pretty good money as well. It's just making sure that that you approach it in a specific way. I see the Nasdaq.
I think it's time to think about it probably more now than you've had to for quite some time, especially if you've been investing in stocks. I mean, you know, again, if you're blind, deaf and dumb and you haven't made money out of the stock market any time in the last 10 years, then something's really wrong.
Yeah. And this is where people are going to get found out, isn't it? You know, a friend of mine was telling me about GameStop over the weekend, and he's got another friend of his that's heavily invested in GameStop because the institutes have been you know, heavily short. So he believes it's going to kind of zebedee back to the upside. But I was kind of, you know, going to start talking to him about it and saying, just because that's happened in the past, which it did with GameStop, it doesn't mean it's going to happen again. And the other thing is that Wall Street know Reddit. It's the Reddit crowd doing it. And they are now going to be probably on the lookout, or all these blog posts of when that may well happen. And they'll put particular protection in place. And this is the issue, that you're going to get a lot of people coming into the market, just as they do with cryptocurrencies, with a complete lack of understanding of how these things move, over leverage themselves, think that the stock market's been going up. That's what they've been hearing. The stock market's up by, you know, 50% or whatever, or 100%. So, oh, great. Okay, well, I'll start putting my money in that. They pick the timing completely wrong with leveraged accounts. And then a lot of people will get burned in this sort of scenario. And the way I would sort of approach it, now I've got my hedge on, I feel pretty comfortable about this. You know, I'm going to just leave things as they are. Can't lose anything from here. And I'm going to let this play out, let it wash out, because eventually it comes back up again. And that eventually, I think, could be as early as November, May. I don't think this is going to last very long. I think it's going to be a bit of a flash crash and we start to pick back up again. Because even though I think that there's something going to break, unless that happens, that's different, of course. Unless that happens this time round, I think the Fed and others come up with a way. You know, they're obviously already talking about it, but they come up with a way to kind of to save things right now. I think that if we're talking about trading, I'm not sure whether we're there yet. If we're talking about the whole pick, you know, the whole sort of like system, I think that there might be we may see this manifest over a course of a few months, you know, rather than just happening over the course of the next 2 weeks.
Oh, as you say, it'll be a flash in the pan, and this time next week we'll be talking about record highs again.
yeah.
Because you know, and that was my first question. It goes back to the first question: where are they going to divest their funds? And that's pretty much what we've been talking about.
Yeah.
Anyway, have you got a trade of the week?
Oh, mate. Oof. Oh, do you know? I think there's. Let's have a look. I mean, the dollar I think is interesting. And the reason I think the dollar is interesting is that we've seen a decent burn to the upside on the dollar. And the central bank is about to come and possibly pour flames on that. So I'm going to look at the dollar and I'm going to say that there is a chance that the dollar is going to be the one that suffers this week. I think pullbacks in the dollar could be on.
Agreed.
What would I pick it against? Probably. Let's be very highly speculative and go for the pound. They've got a central bank as well this week, so I'm going to say cable for a long.
I don't know that the dollar's going to pull back far, to be fair, because once they get a sniff, they're going to have a crack. And I mark them as wrong in backing the US dollar, but then that's me. But it is at a resistance level. There's a horizontal level there as well. So we're at a confluence right now. As soon as it hits that high, I think it's going to come back off it. But I don't think it's going to go much beyond, well, let's call them the shoulders there.
Down here.
Yeah.
Yeah.
I don't think it's going to go too far. And then it might pop through there. Not sure if that's the case, but
you see, this is a weekly chart. So if this was to come down, I mean, it would be for the week. It would be pretty good if it comes down to here, because you know, looking on the dailies, it's from high to low, and this is the dollar index, of course.
So yeah, I think you're probably on the money with potential weakness in the dollar this week, but yeah, much will depend on the Fed.
Oh, Lewis is talking about the Aussie dollar as a potential upside mover.
Ooh. Let me give you a few reasons why I can't get into the Aussie at the moment, Lewis.
Give us that, mate, because when I was looking yesterday, I was looking at the Aussie and I was thinking, actually, things don't look too bad for the Australian dollar. I think that there's a case to be made for some upside. I don't like the look of that, though, to be honest. But yeah, go on, mate.
So what? And I don't know if it's in the world news at the moment, but the Australian government did a deal with France some years ago, probably 5 years ago, if my memory serves me correctly. But you know, you can't really go on memory. I think it was 10 submarines. Which were
Paul, right?
2016. Thank you, Paul P. And I don't know how many hundreds of millions of dollars that was for, billions of dollars that was for, but I think the government had already, obviously they would have paid them an upfront fee to begin, and there'd be an exit clause, but they've cancelled the contract because they've signed a deal with your mate Boris and nobody's mate Joe for nuclear powered submarines.
Yeah.
So they actually jumped out of that deal and gone into the other. Now, China's said that they're arseholes for doing that. And France, of course, is up in arms. And there's talk that Eurozone trade deals with Australia may be affected because of it. Now, I don't know the validity of that, or whether it would happen, or whether it could happen. And I've also, China are also jumping in on the bandwagon. And as you know, China's already got big sanctions on trade with Australia at the moment. On top of that, we've got iron ore, which has gone down 50%, or thereabouts 50%.
Yeah.
Iron ore commands, I think it's somewhere between 15 and 17% of Australian exports. So that's going to suffer in dollar terms. And, you know, something like 3.5% of Australia's GDP is iron ore based. So in the short term, until that corrects itself, I'm not saying the Australian dollar is going to tank, but I would find it very difficult to back it at the moment until those sorts of things get smoothed out. I agree with you from a fundamental point, or from a numbers point of view. It doesn't look too bad at all. But we all already know that the GDP figure is going to be crap when it's released in the September quarter. So we know that that's going to be bad. I guess the market has already priced that in, really. And that's why we've seen the dollar come off in conjunction with the iron ore price falling. So I guess to a certain degree, that is in the market already. I've just got question marks at the moment.
Yeah. You know? But you know, mate, that's one of the reasons that I would have thought the Australian dollar would potentially move to the upside. But you know, because GDP is going to get affected, and because you've got all this stuff which will, you know, affect GDP further, then that points to a stronger Australian dollar because of better purchasing power. You know, it's so that's the reason I think that the Australian dollar might strengthen. You see, the thing is about it is that if we take everything just completely equal with no central bank involvement, that's kind of what we're looking at. We're looking at prices coming down because you get a weaker economy, means that by default that the currency of the country is more valuable. The problem I think that we've all got is that we're getting into this point where because we've heard about taper talk, we're getting into this point by saying, well, actually we're at the other end of the scale now, so the numbers start to flip over. So now you need good numbers to suggest a stronger currency, because that's where the central banks are going to need to cool off the economy. I just don't think we're there anymore. The cooling off the economy talk, I think, is probably well and truly on the back burner. Right across the board. So this is where you start. This is where I start to go, okay, well, now I'm in a different mindset. Now I've got to be thinking about what kind of purchasing power does each nation have? And the best way to think about that is thinking, actually, the weaker the numbers, the better the currency.
Interesting.
Yeah.
Yeah, the way I look at that, in particular the iron ore picture, is it's going to take double the demand to produce the same result in terms of simple currency exchange.
Yeah.
You know, China is yuan for Australian dollars, or whoever else is buying iron ore. Coal the same. I don't know what the coal price is like, but that's the way my mind works. So I hear what you're saying, and that's why I'm not at all confident that the Aussie, I don't know. I've just got a bad vibe about it. And I think because the market is currently risk off, then Aussie yen short just makes perfect sense to me.
Yeah, I agree with you on that. I mean, just on the iron ore thing, if the price of iron ore gets low enough, then the purchasing of the rest of the world to buy that iron ore at the
they'll jump in,
price, will jump in, and that means
and force it up.
And force it up. So and the only way they can buy iron ore is by first purchasing Australian dollars to be able to exchange it in the country.
That's right.
So again, sort of like, you know, the demand for Australian dollars starts to go up on that front. I think if we look at the iron ore, what we need to see, I think the iron ore analogy is a really good one, and I think it's a really poignant thing to be looking at, because if we start looking at the price of iron ore, and try and make an assumption call on when that will be turning by looking at the charts, that may be a decent trigger for us to start looking at the Australian dollar.
I'll go along with that.
Yeah, well, let's have a look at that on Thursday, mate. I think that might be a poignant exercise.
All right, mate. So, did we have a trade of the week? Did you have one?
Well, mine's
Aussie Yen short. I mean,
yeah,
I made no secret.
Yours is Aussie Yen short. I think mine's pound dollar.
Oh, that's right, pound dollar long.
Pound dollar long, but I can't say.
You're going to ruin our breakout trade if you do that.
I say with no conviction, though. I have to tell you, mate, because I hadn't prepared for a trade in the week. So, but I like, if I was looking at this on the technicals, I think the pound's getting close to a buy zone. I think the dollar's getting close to a sell zone. So that's why I'm going for pound dollar long.
Cool. Our take profit level. So you're allowed to go long after we get to 136.13. That's our take profit level.
Yeah, okay, I'll go with you on that. I would be happy to go long from that point. It looks to me like there's a little level down here, isn't there? 130, and that would be that level is 136.26. But you want it down here. Okay, I think that's still achievable for us both. That would be my long price, actually, where you're taking your profit would be my long price, somewhere in that area. So
well, the bad news is, of course, that Aussie Yen's untradeable now because it's already gone. That boat's left.
Yeah,
sadly.
I think that's the case with a lot of this stuff, isn't it? That the boats have
this week. Yep.
Have departed. Yeah. So they departed last week, and now they've just opened up and they're still doing their thing. But there'll be another one, mate. I mean, that's the trade of the week, but there might be a trade of the day, maybe. Yeah,
look, I think I'll be looking at the euro in particular, as I always do. And today it's in a wonderful position in terms of looking for something to trade. But you've got to have a few more signals in the bank than I've got at the moment. All I can see is a break short on a range. That's always good for me because if it comes back inside, I can trade it to the other side. And we are at a support level, so I'm okay to trade the euro dollar back to the daily pivot today. But again, I've got to have a reversal signal and then a higher low. So that's going to take some time.
I think a lot of these are going to take a while to unfold, aren't they? Now,
Kiwi Swissy short, Lewis. Yes, mate, for sure.
Yeah. Okay.
Have you got a Kiwi Swissy chart for Lewis?
I will do, mate. Yeah. Kiwi Swissy. There we go.
I tried to trade this a couple of weeks ago, didn't I? Think so. Kiwi Swissy. I was by a short.
But these two currencies are both currencies that I'd almost want to go short on, if I'm honest. I don't particularly like either of these two.
Yeah, well, it's similar to Aussie Yen, isn't it? It's a risk on, risk off scenario.
Messy area up here. You're looking for the short inside bar. Looks like a bull flag kind of thing on the dailies. I mean, it's possible you get something like that. I don't really like the kind of numbers on either of those two. Looks like a bit of a bull flag kind of look about it. I guess if you're trading within the range, then coming down to this point, I think is just as likely to go up. Let me just have a look at this on that. Okay, so you're looking for it to retrace back down to this area. I get that. Yeah, inverted head and shoulders. Do you know, a lot suggests to me that that the Swissy is not a great currency to be going long on at the minute, but the Swissy, the Kiwi's another one that I think that, you know, the tide's turned a little bit. So I guess fundamentally, I'll be happy to go with either direction on these two.
Yeah, I think it's a risk off play. I don't mind that as a play on risk off basis.
Have
I'd
we got
like to see,
anything?
yeah, I'd like to
Yeah.
see a clear lower high.
Oh,
And
there is a lower high on the hourly,
yeah,
actually.
a bit ugly.
But yeah, it's a bit messy, isn't it? I mean, I just wonder whether that's the nature of the beast with this particular one. Yeah.
The wonderful thing about lower highs and higher lows, if you like, is the ones that work generally follow a decent move in the opposite direction. So you'd want to see some good buying coming in before you got your lower high. In my opinion, that's the way I like to trade them after a bit of a rally or pullback. So I'd like to see probably that lower high come on the trend line, the resistance trend line.
Yeah, I'd agree.
That would make sense.
Yeah, totally agree with that. That's what I was just looking at here. Let me just see what the horizontal level is here. There might be something over here as well, which would suggest that there's something. Yeah, I think that I'd be a lot more comfortable if that came through and then came back to go lower. I don't like the area, you know. I think the area is a little bit tight, and the same to the upside. If it kind of broke through there, then I think that's what you could be looking at. This whole kind of area in here looks a bit kind of no man's landy to me.
Yep. As far as Aussie Kiwi is concerned, well, I've just voiced why I can't jump into the Aussie long at the moment, but I think 102 area could be very, very interesting. And by that time, hopefully, it's only 100 pips away, not even, 100 pips away. By that time, hopefully, this potential disaster from trade point of view with China and the Eurozone has actually played out, and we know rather than we can react on fact rather than rumor.
Falling wedge down here, mate, on the weeklies.
Oh, look, it's due a turnaround, no question, but I think there's a little bit left in it.
Yeah, I think you're right.
Maybe 102.
There's a little inverted head and shoulders there. You see,
yeah,
that's
false break.
Too messy, isn't it? Yeah. Too messy on that. I wouldn't have minded that if that had held there as an inverted head and shoulders. That would have been great, but actually that's too scruffy now.
Well, it's talking to me the other way now.
Yeah, I agree with you, mate. I think downside at this stage would be a more comfortable position for me as well. I don't think I'd want this to move.
But I think fasten your seatbelts on that one, Gary. For me, I'm certainly looking for it. I'm just not willing to jump into it yet.
Yeah, I agree. I think you need it above. It's got to break, really. I think you're probably looking more of this. If you're looking for a reversal pattern, I think you'd be looking more at that, and then it popping to the upside, possibly here, and then back into here. And at that point, I think I'd be more comfortable if it did something like that. But even then, still not through the trend line significantly enough, I don't think. Really, it's got to be above this area, hasn't it? It's got to stay. Yeah, I wouldn't pick it up down here. But if it broke this trend line, second time of asking, possibly, then that would be fine. But not right now. Not for me. I wouldn't be going long just yet either.
Yeah, look, it's not easy right now. We've got to wait because we've had decent moves, and they have to play out, or we have to get a retracement on one or the other. So at this point in time, I'm happy just to sit and do nothing.
Yeah, there are sort of some weaker factors for the Kiwi. Let me just bring in my. That's the long way.
If we talk about Australia, and because both Australia and New Zealand treated COVID in pretty much the same fashion, by an elimination strategy. Now we're seeing, and everyone was talking about, okay, they're going to be the two best countries to come out of COVID. And we've had a little bit of a flip side on that in the last 3, 4, maybe even 6 months, because of now that the lack of vaccination in both of those countries has now caused breakouts since Delta came into being. There's been breakouts in both Australia and New Zealand, and that's now determined, or it's now put the market in a situation where, okay, we've been waiting to buy both these currencies, or we feel the economy of both these countries is going to come out better than any other. Now that's done a flip-flop, because both Australia, who's now been in lockdown in the major cities for, well, months now, nearly, and New Zealand now doing exactly the same thing. It's not unusual for Australia and New Zealand to be doing the same thing because they follow each other, and they're both based on, well, commodities, I suppose. So I think the Kiwis had a day in the sun for the last 2 or 3 months that they're now probably looking to turn around. The market, that is, not the Kiwis. So I think the Kiwis due to come off. What that looks like and what currency you'd like to trade that against, then whilst we're in a risk-off scenario, I think the yen and the Swissy are probably the ones that you want to be looking at. That's my perception or analysis.
Yeah, I think
both.
you're right. I think you're right. And this is, when it comes down to the yen and the Swissy, the fundamentals almost go out the window a little bit because it is to do more with overall market sentiment. I think there are things to not like about the Kiwi, though. I think the initial confidence from New Zealand has subsided substantially, and I think that there might have been a bit of an overreaction initially when they started to taper. I think that there was the idea that was going to be the state of things to come, but it hasn't been the case. So that in itself, I think, probably would take the wind out of the sails of New Zealand, because they're just not where they were before. But let's have a quick look. So we got unemployment change is the unemployment rate. It's almost there. It's almost there. I mean, if you look at the unemployment rate back here, 3.3, 3.4 was the actual, and that was the lowest point, and we're currently sitting at 4. So we're getting nearer to that kind of lower band for New Zealand. So strength there in the economy for sure. Inflation expectations were high. Now let's see if they are moving higher as well. Well, they are. So that's not very good. Business and manufacturing. I'm not sure what's going on with that. Why is that giving me different numbers? I'm not sure, but that would actually be good for the currency there. Policy statement there. Retail sales moving higher, so that's kind of weaker. Yeah, let's look at some of these numbers here. Yeah, if you look down the list here, most of the things look pretty good. Employment change is the unemployment rate is dropping. The PPI input as well, quarter on quarter, that's going up. So that's suggesting that prices are starting to increase. And what we've seen really across the board, retail sales also going better. So this is kind of like some of these are messages to say to the central bank, building consent. Actually, that's not too hot. It's not too bad. It's not too bad. This is messaging for the central banks to say, actually, you can react here. You can sort of do something. You can start to taper, which they did. However, over on the last meeting, I think that there was a cooling off of that particular language. And if the global economy is about to have a slowdown, I don't know whether New Zealand are going to be that keen just to continue to taper. So initially, when you start to see those numbers with taper talk coming in, people start buying up the Kiwi. because they think the central bank are going to have to react to this slight overheating. But if they don't react, you've still got this situation with an overheating, which means prices are going higher. And that means the New Zealand dollar is losing its purchasing power. So if you assume that we're probably, where we were, then I think the anticipation might be now for a weaker dollar on that particular front. I don't think that there's going to be any reaction from the central bank. I think they're going to let it run hotter for a little while, and I think they're going to need to. I don't think they've got any choice really right now, but to let things play out for a couple of months.
There you go. I'm no economist, so I can't kind of enter that conversation. But yeah, to me, it's just a little bit overcooked anyway. So yeah, I can see a bit of a slow time for the Kiwi.
But that's the thing, mate, isn't it? If you think about it being overcooked on the price action, which we are seeing, if we look at it against the Aussie for one. And this is where, Gary's saying about Aussie Kiwi long. I think both Jeff and I believe that it is a trade, but just not yet, because it's definitely overcooked against the Australian dollar. How is it against some of these others? This is the euro against the euro. Euro down against the Kiwi, against the pound.
Right to the bottom of the range, yes.
It's getting there, isn't it? So we have seen that the reaction now. I wonder, this is the Kiwi versus the CAD. So the Kiwi has been a bit of an outperformer. And if you think about one of the reasons that may be, it may be because there was expectation of taper, and being one of the first ones to give traders decent carry on their positions. That might be, one of the reasons that we've been looking at the Kiwi, because of the differential in interest rates. But if we start looking at these numbers, and these numbers are still running relatively hot, but they are not going to do anything, then surely the logical conclusion is that it starts to reverse what people were expecting, if the expectations aren't realized. Mm-hmm. So that's one of the reasons that I would have thought that the Kiwi could well be a short.
Yes, let's stick it into the Kiwis.
Sticking into Kiwis for right now. Yeah, I think that's okay. Maybe we should have gone dollar, pound Kiwi long instead of the dollar. I don't know.
Well, I am long pound Kiwi.
Oh, great. Okay.
Have been for months.
Okay. All right, mate. Well, let's wrap it up. We're sort of a little bit over, and you'll be back tomorrow with Shukri. I'll be in on Wednesday, and then we'll be back for the quiz on Thursday together.
Yep, happy days. Looking forward to that. 2 reasons. Thursday, it's the end of the week, and we'll be back together. But thank you all for being our trading buddies. We've enjoyed the show, and a bit more talk than trading, I've got to say. But I think that's the nature of the market right now. It has moved substantially in most instances for mine, and I need to wait for a little bit of retracement. And hopefully, I get them, and then I can jump into those that I saw were possible for the week. So you have a good day tomorrow, mate.
Yeah, thanks, buddy. You too. Have a good one. Have a good one, guys. Thanks, as Jeff says, for being our buddies. Thank you, Paul P. We will see you, or I will see you on Wednesday. Jeff will see you tomorrow. Thank you to Angel as well for looking after us, as always. Have a great rest of the day, guys. See you in a couple of days.
Have a good one. Bye-bye.